Alright, let's break this down like real talk over brunch. You walk into the bank, drop off that crisp $100, feeling good, like, I'm saving now, baby. But let me tell you what really happens after you leave that counter. That 100? It don't just sit there with your name on it like a locker. Nah, that money just clocked in for the bank's shift, not yours. See, when you deposit that $100, the bank keeps maybe $10 for reserves. The other $90, they out here lending it out? To who? To somebody else. For a car, a credit card, a mortgage, a business. And guess what? They charge interest on that $90. They flip in your deposit like it's product on the block. That person who borrowed it? They spend it somewhere else. And the next bank that gets that money does the same thing. They only hold a piece, lend out the rest, and the cycle keeps going. Your same $100 might be working in 10 different places at once. It's called the money multiplier effect. So while you sitting there looking at your account saying, my balance still $100, what you don't realize is that $100 already got passed around like a mixtape in 2006. Banks out here making money moves while you sleeping. And what do you get? A little 0.5% interest. Maybe. They making bread off your bread. That's why I always say, banks don't keep your money, they use it. Now don't get it twisted. Your money's still insured. Up to $250K thanks to the FDIC. But the game ain't about protection. It's about profit. They lend high, pay low. They the middleman between your savings and somebody else's dream. So what's the move? You gotta flip the script. Don't just let your money chill in the vault. Put it somewhere it's working for you. High-yield savings, CDs, or investments. Anything that pays you more than pocket change. Because while banks out here acting like they doing you a favor, the truth is, your deposit is their hustle.